You can continue to take the beaten path of investing in stocks one by one. Or you can reach for Sector Spider ETFs. They divide the entire S&P 500 into 9 distinct sectors, like financial or technology. Simply choose the sectors that best match your investment goals. With Sector Spiders, you'll experience the diversification of mutual funds, the transparency of an index, and the all-day tradability of stocks. Ready to harness the power of a stock alternative? Before investing, consider the fund's investment objectives, risks, charges, and expenses. Go to sectorspiders.com for prospectus containing this information. Read it carefully. Visit us at sectorspiders.com.
Let's talk about Ron's 3 commandments for trading ETFs. I'm Ron DeLegge with ETFguide. Welcome to another episode of Marketplace Minute. Let's begin with the first commandment: stay away from the market open and the market close. So at the market's open, all of the ETF's underlying holdings or stocks may not be open for trading. And that may create wider bid-ask spreads in the actual ETF itself, which increases your cost for trading or buying that particular ETF. So better to avoid the open, wait at least 30 minutes as a rule of thumb after the market's open. Same is true toward the tail end of the day as the market begins to wind down. APs, or also known as authorized participants, may be reluctant to take on large positions because they want to balance their books and go home, and that can lead to larger or wider bid-ask spreads. So again, avoid the market open and the market close. So let's talk about commandment number 2, which is to size your orders correctly. How can you do this? Well, the cost of trading ETFs, and this can even apply to stocks, when you're buying and selling in odd lot orders is higher compared to round lot orders because most brokerage firms have a fixed minimum commission level. So odd lot orders are anything that's different than a standard round lot order of at least 100 shares. So for example, if you got 78 shares, that's an odd lot order. Or 156 shares, that's an odd lot order. An even lot would be 100 shares, 200 shares, 500 shares. So when trading, try to use the even lot so as to minimize the trading cost of your ETF as well as stock trades. Finally, Ron's last commandment for trading ETFs is to use margins sparingly. Yes, I know that margin can magnify your gains, but guess what? It can also magnify your losses. And you can lose more money than you've invested when you use margin. In fact, you may even be forced to sell some or all of your portfolio holdings when the stock market falls in price, and that can be quite damaging to your overall investment portfolio and strategy. So if you're going to use margin, use it sparingly. And those are Ron DeLegge's 3 commandments for trading ETFs. Thanks for watching another episode of Marketplace Minute. You can go to ETFguide.com for all the latest market news and analysis.